Good day, everyone. Well, we see the market averages trying to push higher once again. It's a bit of backing and filling and a bit of erratic moves, but nevertheless, with all the QE money sloshing around out there, it finds its way into hard assets, which include equities. And this rally, which started in mid-February, has yet to correct even 3% on any of the majors. This is the longest, the sharpest rally we've had since QE and one of the QE programs took hold back in late 2011. Um, so it's interesting to see that you look at the Dow and you look at the S&P, and these things are like 1% away from all-time highs. That should serve as some sort of resistance to just blasting right through. We have a lot of headwinds, as we've discussed, and of course the issue is, the big wild card is that these rallies can go further than anyone expects. I guess without a correction. I mean, we're looking at the average, the Dow and the S&P, very sharp rallies with no real correction in place, and so the question is whether when are we going to get even a mild correction? I mean, nothing goes up in a straight line, at least it never has. But of course, maybe this time is different, right? Maybe the Dow will be at 30,000 without any so much as a 2% correction. But we do have to be mindful of factors like leading stock performance and issues like certain central banks, like Bank of Japan, giving some discussion about possibly slowing down their QE program. But on countering that is Draghi today saying that rates are going to be maintained at current low levels, or possibly even lower levels for the extended future. So I think the markets obviously like to hear that. Commodities, oil, etc., tend to move pretty lock in step together, and we've seen that oil has been able to stage a good rally off its lows, and despite the breakdown in the Doha talks, it seems that of course there's going to be renewed speculation that they're going to be getting together again to see about freeze talks. Of course, at this point it's speculation, but the strike in Kuwait did end, and so that obviously helps with the price of oil moving higher. Outside of this very interesting rally we've had, which has been essentially, I think it's probably frustrated a lot of short sellers, because I know that many people along the way up, there were a lot of short sellers and a lot of people talking about the market has to roll over, and it gave a few scares in this rally we've had since February, but again, those were very mild corrections, if you can even call them that, because they were less than 3%. And so, at this juncture, I think the odds point toward some resistance here on the S&P and the Dow, and maybe what I'm looking to see is maybe some stalling action. We had a churning day yesterday in the Nasdaq, and so this market could, if it's really strong enough and there's enough QE, I could expect it to see some sort of sideways action, and then perhaps a resumption of the uptrend, which would be nice. I think it would certainly send the market direction model back to a buy signal. But in the meantime, it could also switch to a sell signal depending on the action that we see in the ensuing days. It doesn't take a whole lot, just take some bad news out of China or Germany economically to push these markets lower quite quickly. We saw that action in August of last year and then January of this year. These were sharp, short, but substantial corrections, and I think that this tug of war between the global economy and central banks certainly is a viable tug of war, and I don't expect QE just to completely win from here. I mean, it's really done a great job in terms of this rally to almost new highs. But again, there's a lot of headwinds out there, and all it takes, in this news-driven market is another one of these shock headlines showing that not all is well. And there's other headwinds besides the global economy. I mean, there's the fact of negative interest rates and what it's doing to pensions and insurance companies, and we could see the cracks start to appear as a result of the Bank of Japan and the ECB having moved to negative rates, and the ECB saying today that they would go even lower, even more negative than they already have. So, the system is not at all well, and in the meantime, I suppose without bad news, we've got QE pushing markets higher. So, again, that'll be sort of the tug of war as we see the market play out in the ensuing days to weeks. And with that, I will turn it over to Gil.
I think the market's still the same market I've been playing for the last few months, which is it's a bifurcated market. There are short selling opportunities. So I think if you're trying to just blanket short sell everything, then yeah, you're going to run into trouble, and you're better off being long some things at the same time. But you have names like Netflix on a shortable gap down here. I thought it was a shortable gap down. You get a rally back up to the 50-day line here, and that's where I would look at a potential re-entry. You might even try it. Let's see what it's doing today. I'm watching the 620 on this guy, and you had a sell signal earlier, so it came off. You've rallied back above. It's almost getting a buy signal, but I'd prefer to see something closer to the 50-day moving average. So that's one demonstration of a short sale idea that's working. Another one I've been working on the short side is Delta Airlines, which you can kind of see a fractal head and shoulders in here, but you see now once you broke below the 200-day, the 50-day, the 10-day, and the 20-day moving average, so you got this big confluence right here. You've seen the stock rally back up towards the 20-day line, and I guess that coincides also with the 50-day line there. There's so many of them I can't really make them all out. But you can see how that it fails there, and today you're seeing all the airlines break down. There's no S in there. Alaska Airlines coming off the top. This is one. I think they came out with earnings. Southwest came out with earnings. Southwest's actually holding up. Hawaiian Airlines also came out with earnings, and it's trying to hold a little bit here. But they're all getting whacked here on earnings, so I'm not sure how this plays out. All I know is that Delta has been the weakest one. I think the bigger ones have been weak. UAL's another one. AAL probably busting as well. So UAL and DAL shortable gap down type moves today, but they were shortable. I think we talked about these last week. These guys were shortable up around the 20-day line once they started to come off, or even up around the highs here. I think that was another spot I was shorting Delta when it rallied after earnings and then came in. I think that might have been last week I was talking about that. But in any case, those are a few that are working. Some other stuff that's going on, I mean, in terms of the general market, Dr. K, what I see here, if you look at this, is look at this, I love the choppy rally from here at the beginning of last year, just chop, 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 and that could get you bullish and bearish at all the wrong points, and now you just, since we topped in July, you've had this a big break, and then of course QE pushes everything back up to the highs, and then another big break, and we undercut the lows, so that of course sets up a bottom, logically, on an undercut and rally, and boom, here we come back up for the highs again. And it's just relentless. But I think it is a bifurcated market, and the best situations I find in this market to play on the long side are things that are junk off the bottom or ugly duckling types of setups. And those have been names like, you guys might remember when I was first going long Workday, which was here, and it has a nice sharp move off the bottom, and then it plunks around. This morning you're seeing Workday, Splunk, Data, CRM all rallying, I believe in sympathy to Citrix Systems earnings, CTXS. And I was watching these come up. I thought this was short about the top of the range just because it tends to be that. It's a new strategy I use called lather, rinse, repeat, LRR. You sell them at the highs and you buy them back on the pullbacks at the lows, and you just do it over and over. It's like channelingstocks.com. Remember that one from the 1990s, Dr. K? That commercial.
Oh yeah.
And I could never understand why during the 1990s anybody would ever want to be channeling stocks, in other words, buying them at the lows and selling them at the highs and doing this over and over again, because the market was strongly trending, and it was going nuts in 1999 for anybody who was there. I know I was. I hope you guys were too, at least some of you. But in any case, this is an environment of where maybe channeling stocks is a more apt strategy, just by the way that the indexes act. And you can just see even the S&P, you're just down big, up, down big again. You undercut the lows, so again that always sets up the potential for a rally, and you're back at the highs. So where does that put you? Anyways, you see these other names. I guess you could have shorted Workday at the highs. Here's Data trying to rally. Here's Splunk up, actually gapping higher and breaking out. So I mean, here's an ugly duckling setup here. These are all ugly duckling setups. Data and looking more like a big bear flag to me after this gap down move, but it could eventually just be setting up on the weekly chart to go lower once earnings come out, and I guess we'll see what happens when that happens. What was the other one? That's CRM, Salesforce. Also pushing higher, and then of course I believe, and if anybody knows for sure, there's also now Citrix, but notice how Citrix could have been shorted this morning at the highs. You actually got a 620 sell signal. I saw that, but I didn't do anything because it's sort of inconclusive here. The line just kind of drifting around. Maybe now it's going to blow, so you could look at it. The other one was now, but this is such a small, thin piece of junk, I think. Trades what, 225,000 shares a day, so they're jamming it higher. And of course this is an ugly duckling as well. So where are your biggest moves coming from? They're coming from ugly ducklings. I think yesterday we saw several gap up moves in these ugly duckling situations. I'm trying to remember what I saw. That wasn't, but that's kind of trying to come off the lows. See, that's an ugly duckling. But that's mostly what's working. And the other day when silver gapped to new highs, you saw stuff stocks start to jack. Over the weekend, the OPEC nations failed to come to an agreement over a production freeze that would allegedly stabilize oil prices. But I'm sure if they knew that no agreement was going to do this, they would have been more excited about it, because what happened is oil sold off overnight Sunday, but it found support Monday morning and it has turned to a higher high since its low back in February. So go figure. So the conventional wisdom gets blown out the window there, and oil's rallying, and of course that takes up, these are a couple of my favorites. CLR, there's a pocket pivot right here on reversal. If you saw that, you could have jumped on it. I think it's good for a trade for a couple, 3 days, but that's probably about it. And then here you have another one, another pocket pivot in Silica Holdings. If you look at Chevron, come on charts, pull up a little bit. Here's another pocket pivot. You look at Exxon Mobil. Here's another pocket pivot. Look at some of the chemicals. We're going to stuff stocks now, okay? So we got a gap up move here it wasn't really heavy volume until yesterday, but that's making higher highs. So you've got that one working. Dow Chemical, trying to make higher highs. But fertilizers, potash. Look at potash. Had a pocket pivot here. That's like a deep doo-doo bottom fishing pocket pivot. Let me see if I can make this bigger for you guys. There we go. A little easier to see. But you can see how on the weekly chart, sort of a white coffee and test. You make a low, big volume at the bottom. Okay, so you are getting some support in there when it comes down. You can see that on the weekly. Then you retest. Volume's a little light, but you pick up volume 2 weeks ago. Say last week, I suppose, off the lows on a retest of that low, but you never quite get there. That's a pretty classic white coffee and low. And you're turning higher. You get a pocket pivot, and I actually bought some of this on this day 3 days ago, but I think it's probably good for a trade. I don't know. We'll see what happens. So But you're seeing all of these turn. J.B. Hunt, back in the 2007, 2006, 2007, 2008 rally, whatever you want to call it, the truckers, the railroads, the fertilizers, the coal stocks, the oil stocks, the metals, X has been leading the way among metal stocks, and it's just continuing higher. But you see J.B. Hunt, nice reversal pocket pivot here, and kaboom, you're off to higher highs. Now, whether this turns in, this has already had a big rally, so whether this turns into something big or further more substantial to the upside is another question. So we'll see. But I think it does illustrate how stuff stocks have basically been jacking. Canadian Pacific Railroad, Union Pacific, another railroad. Look, gapping up higher today. So so it's a funky market, but if you can orient yourself towards buying these types of setups, okay, and I would not argue, there's some people say, oh, well, this isn't Can Slim and you got to buy breakouts. That's you don't have to buy breakouts. That's baloney. What you are seeing here are breakouts out of low range bases. So in other words, you're not buying stocks as they break out of a base to all-time highs. You're buying them in what I refer to as ugly duckling positions. So this had a long downtrend, and once you start to see some sort of lift off the bottom and then some sort of constructive action off of the lows, now you're in a position where the thing might become viable. And I've done that with a number of stocks. Mobilize, another one. This one's continuing higher. O'Neill's institutional research analyst, I guess, they had an outperform rating on Mobileye all the way down, and then they went to underperform here, and so since then it's gone much higher, which just goes to show you when you're trying to play the old sell-side analyst game, when that's not who you really are, you're going to end up looking silly. But this, aside from all that, I see that, the setups in here, pocket pivot here, a couple of little pocket pivots in here and here, and it just continues to truck higher. Probably gets to the 200-day line, and then earnings come out, and then it breaks. Possibly. I mean, that's what I'd be looking for. But that's what I've been playing. Workday's another one I've been playing on the way up. Splunk, and I buy them at the lows of the range and sell them at the highs. Now Splunk pushed out of the range today. I'm not sure what to do about that. I guess if you wanted to treat it as a viable gap up, what's the volume rate on that so far this morning, Dr. K, on Splunk? What are you showing? Let's see.
Not coming up.
About 40% above average right now. So, I guess I don't think that's enough for a viable gap up.
Yeah, I'm showing 30%.
Yeah, that's not enough for a viable gap up, so you won't want to be playing that. But, if you were buying this along the lows and you wanted to sit with it until you had a breach of the 20-day line, if that's what you were using as your stop, then you're doing fine. On workday, it's a little trickier using the 40-day line. And I'm sorry, the 40-week line, the 200-day line on the daily chart. I'll get this straight eventually. But you notice how it did break below the 20-day line, and it wasn't a decisive break, and it held the 200-day line. However, this rally could seal a deal in terms of turning this, rolling this thing over before they come out with earnings at the end of May. I think you're looking at high PE stocks. In most cases they look like this. So all of these that are rallying with Citrix today, Splunk looks like that. So you can kind of see a wedging. This is a wedging rally on the weekly. You can see the light volume here. And now you're breaking up into this area here. Notice along these lows. Should I use my pen? Do I dare use my pen here? Let's see. Pen. What color do I want? Pen. Green, I guess? Okay, we'll use green. So you can see it's into the lows of this head and shoulders type formation, so the neckline. So you're rallying up in there. And I'm watching this one this morning. I want to watch to see if it becomes shortable. And so far, nothing doing there yet. So, and then you've got data. Well, I looked at data. What is the other one? CRM. Same sort of V-shaped rally. I mean, you really have confidence buying that sort of a pattern on the weekly? Not really. So what you have to do is close your eyes and don't pay attention to the weekly. Just look at the daily. So you get these nice little bases. You buy it off the 20-day, it moves higher. You buy it off the 20-day again, it moves higher. And my guess is probably going to pull into the 20-day again at some point here in the next couple of days. or maybe I'm wrong, maybe it continues higher, but it's generally shown the pattern of moving to new highs, pulling back in, moving to new highs, pulling back in, and your spot to buy it is the 20-day moving average. Lather, rinse, repeat. Buy the lows, sell the highs. Buy the lows, sell the breakout, and you just do it over and over again, and you'll be rich eventually. I don't know. I'm up close to 20% year to date, which in an environment like that I think is pretty good because it's very erratic. And intraday you'll see a lot of things like, I'll give you an example. Something I'm short right now, I put out this morning at the open, and I'm basically running flat, maybe slightly up on it right now, is Nike. Right at the 200-day, right at the open, and it's up with UA. But, the stock starts to break down, and it looks like it's going to roll, and it turns and rallies up. It's moving with Under Armour and sympathy, I believe. So Under Armour's holding this sort of a bottom fishing. This is a pattern here. You get this sort of wedging action in here, sort of an ascending triangle. It's breaking out today on a gap up. Would you treat that? What's your volume there, Dr. K? Would you treat that as a viable gap up?
Yeah, I mean the volume is sufficient, clearly.
So you could treat that as a viable gap up. So although I thought it was shortable right at the open, because you did get, well, no, I'm sorry, I take that back. You didn't get, well, you got a MACD cross here, which could have brought you shorting the stock. I usually look for the two of them, but a lot of times I'll hit a stock on the initial MACD cross. That's what happened with Nike. So it's in there quickly. But now it's giving a buy signal, so now I'm kind of on the verge of, if it starts to send me underwater on the position, do I just blow out and cover it? So Dow's down 15 right now. Nasdaq's actually up 12. And you're seeing a number of stocks, like Facebook is rallying on a big, somebody came out and said that there's going to be a blowout quarter. That may be true, but we'll see how the stock actually reacts when the report comes out. Here's what the stock looks like. Got this big sort of supporting type pocket pivot move at the 50-day line. And this all occurred, as we know from last week, when there was a discussion of, or a release of weak ad sales numbers. So that sent the thing down, and during the middle of the day, somebody said, oh, that was a misprint, sorry. You got to wonder if somebody didn't know that, and so they're scooping up the stock in the morning when it's getting hammered, and then they come out and say, oops, where's the SEC when you need them, huh? Anyways, you come down to the 50-day on Tuesday and bounce off 50, and now you're pushing back up to the highs. This is what it looks like on the weekly chart. Now, I got to say, if you're looking for beauty here in terms of a weekly chart formation, the classic sort of O'Neill style base, properly formed base, this ain't one, okay? How would you describe this base, Dr. K? What can we give it? It looks to me like some sort of a bird. Like here's the two wings here. It's sort of like I see the here's the beak, and here's the neck. See that?
Yeah.
And then here's one wing like that, and then here's another wing. See that? And here you have a couple. You got the feet down here, the legs and the feet. And I got to say that's a very compelling pattern. I mean, we could call this.
You drew that pretty quickly, and it was done so professionally.
Well, I am a former cartoonist, so
Yeah, so I just figured that would apply to the pen, not to the mouse. But yeah, it does look like one of those flaming pterodactyls.
Yeah,
those,
maybe this is what is
birds
it
of the
here? This looks more like the pterodactyl sort of pattern here, because you got this. And then you got this, because you got these deep V's here, and then the long sort of tail thing going on. So you could call it a double flying eagle or double pterodactyl formation. It looks very compelling, I must say.
It's so unique. It's unfortunate that it's this unique, because you can't really demonstrate your drawing abilities on most of the chart patterns unless they.
Well, I can if I really want to get crazy. So I've done that. With other stocks in the past, you can draw all sorts of fun things. So, if you want to, and I'm not really under the influence of any alcohol or other drugs or anything like that, I would have to say, unless there's some in my system from the weekend. But in any case, a double bird, that's what's on. Yeah, a double bird. Flip them the bird. So that's what this thing is. So to me, I don't know. This almost looks failure prone. So I guess you're getting a nice trade out of it today if you went long. But it's kind of, I don't know. We'll see what happens here. What is it?
That's the problem with a lot of these so-called leading stocks that they're super caps and the institutions need to be on board these names, and we're just not seeing real leadership quality coming out of any of the FANG stocks, for instance. And it's just, again, it seems like QE just kind of slowly moving into the market to push it higher, and I guess absent any real negative news, that QE is just going to continue to do what it does.
Yeah.
But again, the odds are that, given all the headwinds out there and just the nature of news, we are going to come across some major headline story that's going to hit. Always does. Especially in this QE environment over the last few years, you do get enough of these. But I think the acceleration of negative news is there. And certainly since August of last year, the acceleration has been quite pronounced. So, I think the odds are with us in terms of getting one of these negative news events. Of course, you don't want to argue with a trend. So naturally, if the market starts to, it's stalling out a little bit here, but if it starts to, just continue to drift higher, you got to be aware of that. And I think that we will see some additional actionable stocks as a result of a continued uptrend.
So then I guess this is is this like a cup with handle? If it isn't a bird formation, is it a cup with handle? Is that what you're seeing?
Yeah, I mean, it's a defective cup. Well, I guess, it's contextual to the markets, but it's, of course, not the most optimal pattern you want to see.
No, and that's what you see in this market. You don't see too many things rocking and rolling after they break out. Here's a breakout here, a breakout to nowhere, Panera. But look at this. You get a viable gap up. I believe it's a viable gap up in the stock. You're pulling down to the lows of the range here, which is 214.23. So you're a little over $1 away. That's 0.5%. So maybe you want to try and buy this viable gap up. But I think they come out with earnings. When do they come out with earnings? Let's see. On 4/26. So that's next Tuesday, I believe. Apple's coming out with their earnings on Tuesday as well. So they delayed by.
It just doesn't really go anywhere, and you can look at the weekly and you can see that you just don't get much out of the stock. So
yeah, you're right.
A couple of days ago, it gapped higher, but it wasn't a proper viable gap up, so we didn't put it out.
Yeah, this is what it looks like on a longer term basis. It's a stock that's tried to break out several times and it's constantly failed. So you go one failure here. You could call this another sort of a trend line breakout here. And it fails, and it looks like it's going to break out here, and then it fails, and then another breakout here. So I wouldn't be surprised, I guess, if this failed as well, huh? But that's really, what you get in this market. So just a lot of sloppy stuff. The semiconductors have run into a little bit of selling, and I would ask you a question, Dr. K. As I read this thing has followed the 10-day line for at least 7 weeks. So based on this violation of the 10-day line, if you bought it down here, would you be selling it?
Yeah, you should definitely sell it because it's violating that rule. And you've had a good gain in it as well, and it's pretty much giving you all the signals that you need. It's a very clean pattern, so it's giving you the signals to have sold it already. Take
all right.
Profits.
So, and then we had these that were, is this the one what I'm thinking about? No, what were the ones that we had? No, MTSI. Didn't we have this out on a pocket pivot here? Here's your breakout, a double bottom breakout, okay? And it's failed. I think this thing has failed, and you close under the 50-day here, and you move lower, so you basically violated the 50-day line. And the junky little semiconductor, that's what happens. So that's why I don't like junky little stocks. And here's Maxell, Max Linear, breaking down and starting to look like a little fractal head and shoulders type formation. So you get a big break through the 50-day line. It already did this funky spin out once, and then they drifted back up to the highs, see, just to suck everybody in. But if you bought this, if you were alert and bought this day, then what you would have is an opportunity to unload into the highs because you're going up on light volume, and that's usually where they sell them. So buy it on the pullback, sell into the strength, rather than buying on the strength and selling into the pullback, which Can Slim cult members like to do, and they haven't really adapted to anything differently. But you can see if you're buying breakouts and thinking you're going to make big money, especially with these two stocks, you're probably wishing and hoping for way too much. Let's see. I don't see any real questions. Is anybody awake out there? We got a decent crowd, but maybe everybody's asleep. The market's just sort of made you numb, and you don't really get it. You see things flying around. Let's look at Apple, which I think is a short, or was a short as of Monday, on the reversal at the 200-day line, and you broke down. You're now under the 20-day line, so rallies into the 20-day line are shortable in my view. So you could shorted the stock last couple days, and it's come down. They come out with earnings on Tuesday. BABA is one I've been playing, but again, this is buy it at the 20-day, sell into the high, buy it at the 20-day, sell in the buy it at the 20, and you do this over and over again. So the LRR strategy, lather, rinse, repeat. I was saying wash, rinse, repeat, but somebody corrected me, and they're correct on that. It isn't wash, rinse, repeat, because I did check the back of one of our shampoo bottles here at the house, and they do say lather, rinse, repeat. And that was probably a great marketing phrase too. It's like lather, rinse, repeat. Use it twice so we can sell you more. Okay, because you really only need to use shampoo once, I think. I don't understand where the rinse, repeat. If you didn't do it right the first time, are they telling you that you didn't have enough soap on the first time? So instead of lather, rinse, repeat, why not just lather up twice as much and rinse and then forget about it? I don't really understand the logic behind that phrase when it comes to using shampoo. It does seem to have some logic in this market, though. But I'm sure that phrase also helped to sell a lot of shampoo. So, anyways, silver. Let's do the Burl Ives analysis here. Silver actually flipped out and held the gap up. I guess, it's a viable gap up, but the thing is with silver and gold, they tend to be volatile. So I think, I was looking maybe for a gap fill to the 10-day line, but look at how it's held. And of course, this takes stocks like Silver Wheaton on a viable gap up here. I thought that was a viable gap up. 1777 is your intraday low there. Dow's coming off 38 now. I think we're coming off. I don't know how much, but I think we're going to sell off. So I don't really want to be chasing anything, and I'm sort of sitting back looking at what I can short. My Nike is starting to come in a little bit. FB, Facebook, I think is going to become a short in here. Again, I don't know if it does so before earnings. Maybe it gaps down or gaps up, and you can short the gap. But I think it's showing some signs of wobbling, and as Dr. K was pointing out, the pattern is just really defective, the double bird. But so far it's worked. The stock has held up and continue to make higher highs, more or less. And it's only about 3% off its all-time highs right now. So we'll see. But that's my thinking on Facebook. And I'll test it, during the day. I'll put out a little bit here and there and see if it rolls in. If it doesn't cover, go away and see if I can come back. But and that worked a few times. But once it turned on, I think it was Tuesday, when Stifel and Associates came out with a big buy recommendation, he sort of had to back away. But anyway, somebody wants to ERII. Yeah, there we go. Remember this one, you guys? And I picked this thing up here when you had a pocket pivot. And Dr. K, if you go back and check your instant messaging log, you will see probably at the end of February 225, 226, sometime in there I did IM you on this. And we sort of chuckled about it. We were skeptical, admittedly, but I said at the time that this was going to be the next Plug Power. And everybody remembers Plug, right? There is a pornographic name for Plug Power. I'm not going to say it, but everybody remembers this. Whoa, where are you? There was a time. Where is this big? Yeah, there's the big move. In here you had a pocket pivot right like this, right around $4, and the thing ran up to almost 12. And I remember when it was breaking down, and some guy telling me he was going to hold it. He had bought it here, and it was down here, down back to $4. So round tripped, and he was going to hold it for the big gain, just like Livermore would. Frankly, I think Livermore would have been smart enough to sell into a climax move, which is what that is, right? And this is right when everybody wants to get excited, and it's going to 20 and blah blah. But that's a climax move, and if you bought it down here, you sell that. And so here we have energy recovery. Go ahead, Dr. K. What were you saying?
No, I was saying it's a pretty textbook climax move.
Yeah.
And, The thing about these ones that they can be quite seductive because they're cheap, thin, and they move fast. But of course, the odds. It's an odds game. So when you play a plug or an ERI and you make money off it, then it can set up a bad habit of trying to play a lot more of this type of stock, which ultimately is putting the odds at a disadvantage.
Yeah. So, but anyways, this thing just trucks along the 10-day line. Now I would say it's if you use the 7-week rule. It is a 7-week rule, isn't it? It's not the 6-week rule, right? Or the 12-week rule. It's a
No.
7. Lucky 7.
It basically, you can't violate the 10-day for 7 weeks. So in other words, from the 8th week on.
Yeah. So it hasn't. It hasn't done that. And now you could use, if you're long this thing. Is anybody long this thing? When we talked about this down here, did anybody get long this thing? I'm just wondering. No, everybody, come on, wake up out there. Anybody go long this thing? Somebody had to. Somebody's long it. All right, that makes me happy. I mean, this thing's too small. $6, $7 stock trades 500,000 shares a day. That's so small I don't play. So I've been watching this thing go up. I think I bought some shares somewhere along here, and it was so hard to buy that I just ended up selling the move higher, and I should have sat with it. But, hindsight's 20/20, always. And it just continues to truck higher. So I know there's a broker friend of mine who bought this when I first talked about it, and he's asking me what my next idea is. I said, well, what are you paying me? Maybe he's the one pushing it up. I don't know. I would say, stock trades 583,000 shares a day. Doesn't need a lot of people buying it to get it jacking to the upside. So let's see. Thoughts on Amazon? Well, I think it's great. A great place to buy stuff. I think I never set foot in a mall for the most part. Oh no, there's just one tea place I have to go to the mall for, but that's about it. I just go on Amazon. You can buy everything from underwear to what, you name it. I mean, anything and everything under the sun. And you guys know that. I'm telling what am I telling you that you all know that? You probably all have bought something off Amazon at one time or another. But what are my thoughts on Amazon? Well, what is there really to think? It stock's in an uptrend. You had to be buying it. Look at the undercut here. It's a nice fake out, and there's an undercut. And you'll see undercuts a lot in this market, and then things will rally. So stocks start to look very grim, and you're thinking it's breaking down, the volume's picking up, and it turns. So really, if you were extremely shrewd and you understood that you're not in a canceling market, you're in an ugly duckling market, you could take a shot. If you can figure out a spot, or you're watching, say, the 620 chart on this day right here. I'm twirling around it. Hopefully you guys can see that. You would be buying it, and then it goes tight sideways. So you're buying it again along the 10-day if you want to, and then you get a no pocket pivot. You get a little pocket pivot breakout right here on this day. That would have been 7 days ago on the chart, and you move higher. So it's moving higher. But this is what it looks like on the weekly. And I'm going to make that bigger. Whoops. Come back here. All right, where are you going? Come back. There you go. That's a bit V-shaped, but it's going higher. And earnings come out next week, I believe, and so we want to watch and see what happens at that point. Because it could turn out to be a big pod sort of situation. But if we extend this out, let's look at it a little further. I mean, for the most part, a couple of things you'll notice, and I point this out in the new book on short selling, and that is that stocks that are leading stocks as they trend higher will generally tend to show very coherent action. So if we look at Amazon on the way up, nice tight base, moves higher, nice tight base, moves higher, nice, well, a little bit of a shakeout, but a reasonably coherent base holds tight on a closing basis. You got a lot of closes in this area. You got this one little shakeout. And each of these moves up came on earnings, so it does that. And the last time it had earnings, I think it blew apart. And here we are back at earnings again. But what you're noticing now is orderly, 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 and then you come in here and you start to develop a little bit of what I call the the clown syndrome. So in other words, this is very nice and orderly in here, and very tight. It moves up, and get a pullback here, but it comes right to the top of the other base, so there's some sort of coherence here. This time it breaks, it doesn't hold the top of the other base, see that? And it's starting to look a little looser than it was back here. So this is what I refer to as the clown foot syndrome, where stocks act orderly, and all of a sudden the pattern starts to widen and loosen, sort of the way, you know, clown feet are. Go reference pictures of Bozo the clown on the internet, for those of you who aren't familiar with what clown feet look like. And no, I'm not going to post to explain what a clown foot is. And we're down 47. We're going back to the lows. The Nasdaq's up, though. I don't know why. I like Apple as a short here. It looks like it's working. Down $1, but it's a little slow. I also have this one short. I put this one out right at, let me get back to my normal non-drawing mode. I love that. Who came up with that? That's what they have on the GoToWebinar little control panel here. Normal non-drawing mode. Okay. That would be just a normal cursor. Why don't they just put normal cursor or whatever? So, and somebody's probably paid a fair amount of money to come up with that kind of garbage. In any case, what was I going to before I was sidetracked? Amazon, let's see. Here's Adobe Systems. This is kind of interesting. I've actually been trading this one again. This is another one off the 20-day, sell it into the highs. Boom, comes in at 10-day. You could buy it there, but I'd rather see a pullback to the 20-day. But again, it's the same situation. Sort of big gap up, viable gap up, but it fails, and now you're just chopping back and forth. But it's an ugly duckling setup because it's an ugly-looking V-shaped formation. And I'm not going to say this is really a bird pattern, because it's not really there. Because the bird has to have a head. There's no head in here. See, now this maybe could be considered a bird pattern here. So here's the little feet. Here's another wing, and then here's your head. See, and this is the proper structure for the bird pattern. So you know what we should do sometime, Dr. K, is just do a sort of a parody of a IBD workshop with all the. Remember, we actually did that one we were at O'Neill, you guys.
With all the different names and the bases, and yeah.
We did that because I think I've told this story before. When we were portfolio managers there, Bill would have these meetings, and for a while there, what he had us all doing was going back and finding charts of leaders that worked and leaders that failed, and then removing all the information, the company name or anything, but leaving the earnings on and the chart pattern, and then everybody had to guess what the stock did afterwards. And so, of course, everybody would come in with these perfect examples of a sound base, a so-called sound base, and the perfect fundamentals, accelerating earnings, high RE, and of course the stock worked. And the ones that didn't have it, you know, negative earnings growth, the base was choppy, those didn't work. But Dr. K and I decided that we would do the opposite, which is we would find perfect setups with perfect earnings and perfect fundamentals that failed. And we would find patterns that were improper, faulty base structures, weak earnings growth, no earnings growth, negative earnings, whatever, losses, whatever. And we would throw those up there, and everybody would get those wrong. Do you remember that, Dr. K? And Bill got sort of ticked at it. But, but it just shows... Pardon me?
I was saying we rigged it quite well.
Yeah, and we did it as a joke. So you know, we could do a parody of a IBD workshop, I guess, with all the coming up with different patterns and sort of stuff. I mean, I think you're probably gonna have to drink a lot of martinis to get creative with to see what you see, like a Rorschach test with charts, you know. Anyways, so again, it's the V-shaped pattern, and you know, I don't know, it's wedging along the lows a little bit. I don't know, you're getting some volume in here, but is this thing, trying to break out to all-time highs. Is this thing really going to make it? You know, I don't know. Okay, anyways, let's get back to something I'm actually short this morning that I was going to mention before I forgot what I was talking about, but now I remembered. Palo Alto Networks, here's an ugly duckling. Notice how it was acting very nice, broke out to new highs. So look at this breakdown. Here, you break, you look ugly at the lows, and you turn and rally, you get some nice volume, and it trucks right up to the 200-day line where it becomes shortable again and rolls over. I believe more or less hit the 40-week on the weekly, but this is a pattern, so that's faulty. Now notice how it did gap up out of this ascending range, and when I'm looking at charts, this is what I see. I see a similar sort of nice ascending range, and Splunk is gapping out. So maybe if you can find a 620 sell signal in Splunk today, let's clean up my chart mess here. Maybe, just maybe it's setting up now. Maybe you go short the turkey. So, here, let me be bold. And so you guys, this is premium access. So I just shorted 2,500 shares, small position in Splunk, just to see what happens here. I'm anticipating, you have the rise here, not much volume. I'm anticipating a failure based on this MACD cross and the fact that you haven't crossed to the upside. If it turns to the upside, then I may cover. Okay, so I just did that. I got filled at, whoops, let's see. Hold everything. I didn't get filled. We'll go 5195. Okay, so I've accidentally made it a limit order. That was stupid. Usually on shorting, I just short them. So unless I see something rallying, like I might put a limit order to short Facebook at 114 or something like that, if I can determine a resistance level. So now here we go, and now it's starting to tip. See, I got off 51.95. We're trading 51.80. What are you guys all jumping on it? Is that what's happening? Premium access dictates that you not imitate my trades. Okay. Okay, you guys knock it down 20 cents here. I'm just going to cover. I'll make 500 bucks. I can buy sushi. Okay. Let's see. What else? I am very happy. Who is that? Who's long? E-R-I-I. Greg. I can't really see his whole name. Let me see. Okay. Well, Greg, we're not going to say your whole name, but if we had a prize to send you, we would send it to you. So, notice Nike is weakening here. Getting back to Palo Alto Networks, so I'm using sort of this. You had this nice gap up out of the range here, and you broke there. So maybe it works the same way. And what I need is probably the high of the day on this will serve as my stop. I don't know. Yeah, that's kind of up there. 52.89. We're trading 51.8. Yeah, that's a buck higher. Maybe that. Probably I'd get out of it sooner than that. So can you guys knock it down a little bit more? I notice now we're bidding 51.77 on that. But I also like, Palo Alto Networks, Facebook, maybe. Keep an eye on that. And I have to admit, I have an order went off there. So you've got the cross here, a double cross on the MACD. This is probably getting ready to come in. That's my thinking, especially if the market weakens. Like, that's rocket science, right? Premium access. I gotta tell you, somebody was asking me why I do what I do, because of websites, VoSI is 60 bucks, Gilmore Report's 50 bucks. Why don't you charge more? It doesn't seem to make economic sense. I don't know. I make most of my money trading, so, and that's the case so far this year as well. So my feeling is, if you're really such a great trader, you should be a trader, not a website promoter. And the purpose of doing a website is, yes, you can make a little money to pay your bills, so you don't have to dip into your trading profits or anything. But it's also just to help other people. Who's helping the guy with $5,000 to $10,000 who's trying to get started and maybe needs a little help? I figure if you're charging someone 600 bucks a year for a website subscription, then basically that's about, they're paying a 10-11% management fee right there on a $5,000 account. So, that's pretty much bare bones, but the guy with 20,000, 30,000 too, So I think these people who charge $800 for premium access, number one, they're full of crap, because I don't think anybody is that good that by sitting with them, you're going to get everything perfect. Even Bill O'Neill was not perfect. And Chris and I, Dr. K and I both sat with him for the most part. We talked with him during the day and know what he was doing and talking about stocks, but what I noticed, he made a hell of a lot of mistakes, and it wasn't so much his accuracy, but his ability to see when he was wrong and to do so quickly and then shift. That was his strength. So I don't really think that sitting there watching somebody implement some sort of technique is going to help you, and I think it's just a ripoff. But there are suckers with lots of money. Anybody who's a broker will confirm this if you've dealt with wealthy people, that there generally seems to be a correlation to how much money you have and how stupid you are in most cases. Not all cases, but in most cases. anyway, so these people, they think that they're going to get something special with premium access or paying a $500 a month or $800 a month or whatever. And there's a lot of websites out there. I don't, not my thing. It's not really doing what it should be doing, in my view. So, anyways. Somebody says, thanks, Gil, that's me. Somebody else says, you've been a great help to me, thanks. Yeah, and, I think, remember, Dr. K, we were in Las Vegas 3 or 4 years ago, and the guy who was our waiter at Robuchon,
Yeah.
he said that we had changed his life, and he paid for our dinner, which was like $1,200. If you ever go to Robuchon, bring a lot of money, or else make sure you have a pretty high credit limit on your card, because that's an expensive place. We had like a 10-course meal, and at the end of it all, the guy, he pays for our meal because he was thankful that we helped him make a lot of money, and it helped to at least improve or change his life. That's
Great
what I
gesture.
want to see. Yeah, and I think that's what makes it all worth it. And if you can do that a few times in your life, then maybe you're a worthwhile human being. So exploiting people because they have a lot of money, and maybe they're dumb too, and they think that you have some magic potion. I'm not into that. So we prefer the real deal. Anyways, yeah, there was some guy who canceled a couple of weeks ago and said something in his email like, Gil only trades his own account and doesn't give a shit about members. It's like, okay, well, you're kind of missing the point, aren't you, idiot? But that's fine. Get him out of here. Anyways, I'm worthwhile anyway. My wife might argue with that, but in any case, let's get on with what we're talking about here, which is the market. Let's look at some more stocks. I'm going to blitz through stuff here. Ready? You got to make up for all the pontificating, the BSing. Tesla. Speaking of BSing, I'm scheduled to be on Gary Kay's radio show on Monday at 3 p.m. Pacific. So hopefully Gary doesn't flake on me. So I know Fox did that a couple times because there was breaking news. Tesla finds support at the 20-day. Everybody loves to hate Tesla, but earnings coming out soon. But again, this thing's had a massive rally, and it's just so V-shaped. You really have to wonder whether this has any real upside. Okay, see Splunk coming back up. See, a bunch of you guys go and hit it. You knock it down a few cents, and now it's coming right back up. But I'm okay. I'm just going to test this short here. We'll see what happens. Nothing major. But again, you see this stuff, and so it's already had its move. These V-shaped patterns. Here's Fitbit. Now, I know some people have mentioned this before, but I picked up on this last week. You had a big Bible gap up. Fitbit may be on the comeback trail, but I'd like to pick it up on scoop it on a sharp pullback to the 10-day line. I wouldn't buy it here. Unless you bought it here 6 days ago, then I think you're a little bit stretched, and you're extended here. So I'd rather see some kind of a pullback. But they come out with earnings. I've seen some dates are May 2nd, some are May 23rd. Somebody call the company, okay, and find out for us. I'm going to have to double check that as it gets closer. But everybody's short Fit. It was a hot little IPO briefly. It was kind of an Icarus type stock. It flamed out very quickly and then blew apart. But what they're finding out in the wearables area is that simpler is better. And Fitbit, I think, is just a fitness gizmo that you wear to see how many times you moved your legs and twitched your eyebrows, I guess. During the day, how many times you went to the bathroom, stuff like that. I don't know. That's what I've heard it does. I don't really use any of that stuff. I just go running. So, but in any case, Apple's got the iWatch, but it does so many things. People don't need to spend that much money for what they want. And there might be some competition, from Michael Kors and a few of the. I think Fossil might come out with one, but I think Fitbit's probably the first one. So you could see a rally based on the fact that the whole world is short this thing. And they are. So I think it's 30% short interest. So that's probably what's been driving it off the lows. But notice how the bottom comes on the worst, the ugliest looking week. So it turns and goes higher. There's the ugly duckling for you. Another one. So all that's to say is that maybe Fitbit is, they're still the number one brand among these so-called fitness wearable things. But so they're still there. So I think if the bear case doesn't play out, you could see this thing rally on the short squeeze. Another one like that is GoPro. There's another company. I kind of like the way this is acting here. And they come out with earnings. When do they come out with earnings? Do you know, Dr. K? Let's see. Let's go to my handy-dandy 5.5. So that's in a couple of weeks. But this almost looks viable here, right along the 10-day line. And to me, there's low risk here. You don't even have to take a big position, because what you're trying to do is you're trying to leverage a sharp move to the upside. So in this case, if you bought 5,000 shares, you're going to use very little money. But there's a good shot that it could jack to 20, whereas your downside is relatively limited. So this is also trying to come around after being beaten to death. And of course, everybody's short the stock, and GoPro is done because everybody's coming out with cheaper versions and blah, blah, blah. And that may or may not be true, but it's not really what I'm watching. I'm watching the price volume action. Of course, they did recently announce, what is this, VU SZ, is that right? No. I'm trying to remember that. Does anybody know the VoSIs? It's VUSI. No. VU... In any case, this company makes something that allows you to connect to a GoPro without and control things in the GoPro without using your hands. So it's like a virtual reality device that mixes with the GoPro. And I'm trying to, maybe it's VISX. No, VSI, I don't know. Can you look that up, Dr. K? The name of the company is VuSix, VUSIX, I believe.
VUSX.
I believe, I could be wrong. No, VuSix, VUZIX. So, hang on one second.
Oh, it's VoSI, VUZI.
Yeah, there we go. The one I wasn't typing in. I mean, this isn't so exciting, I have to admit, and it's kind of junky, but the technology is interesting, so there could be some impetus for GoPro going forward. Number one, there's all this short interest. Number two, you might have some new development with new devices, and you're starting to see some signs of a potential turn. So it's taken a long time, gone sideways, gone nowhere. Maybe it's getting ready to go higher. So somebody asks, everybody's saying FIT reports May 4th. Okay, thanks for that, you guys. Got that May 4th for FIT earnings. VuSI, VUZI. Yeah, okay, thanks. I wasn't looking at that. Somebody asked you, Dr. K, what clues do you see if the market is going to change direction?
Well, you don't know that it's going to change direction until it changes direction. In other words, you can't anticipate this stuff, really. I mean, the whole nature of trend following is just to stick with the trend until it, as Dakota says, until it bends at the end. So basically, it's very zen, in the moment, in the present moment type of strategy. I think that's the only type of strategy also when it comes to trading. So, essentially, you watch price volume action, you look at moving averages, you look at the price volume on the major industries, the leading stocks, and as I've said, the leading stocks are not acting as they should. The only thing really in the market's favor right now is that it remains on this uptrend, but these issues like the overhead resistance that the S&P and the Dow are coming in up against, and that these rallies are the sharpest and shortest, or the sharpest we've seen since late 2011. So I think the odds are starting to really make one question how much further this rally can go without even a 3% correction. But nevertheless, the thing is, these can keep going longer than one can possibly expect. That's the thing about trends. And certainly people who try to short trends, thinking that they're trying to call a top, can be a fast way to the poorhouse, because we all saw what's happened to a lot of short traders back in the late 90s, especially after Alan Greenspan's rational exuberance speech he gave in 1997, and that was 4 years off the absolute peak in the markets, where the Nasdaq just was off to the races, especially the last quarter of 1999.
I can put it in concrete terms for you guys, and this is based on my approach, which is essentially focuses on what stocks are doing and not so much on the indexes. So if I see a buy or a long setup in position to buy, I'll take a shot. If I see a short sale setup like a Nike, for example, finding resistance at the 200-day line, or a Delta Airlines finding resistance at the 20-day line, or even I think GoDaddy is one to possibly look at also because it's found resistance right at the 20-day line. Netflix, if I see a shortable gap down that I can play here, I will play that. If I see Apple reverse at the 200-day line, I will short that. And I'm not worried about what the so-called trend is because I think it's really more a market of stocks, especially since you're seeing a lot of these junk off the bottom names. So what happens, what I've noticed, naturally what happens is I see a short sale setup, I execute the trade. Okay, if it starts to work, I'm campaigning that stock now on the short side. And what I've noticed happens is when the market starts to come off like it did at the beginning of January, I'm naturally being pushed based on the number of setups I'm seeing in individual stocks. I'm naturally being pushed onto the short side because I'm seeing less on the long side, maybe 1 or 2, whereas 5 or 6 on the short side. And on that basis, I'm naturally weighed more towards the short side as a rally runs out of gas, and that's what you'll see. So like Dr. K was saying, you're seeing some of the leaders falter, and I can confirm that with the fact that I'm also seeing more short sale setups suddenly appearing over the last 2 or 3 or 4 days. So from a trading perspective, and unless you're trading the index ETFs and you're focusing on stocks, which I'm assuming most of you do, this is a very practical approach to the market, a bifurcated approach. And even if you're not the type of person who likes to short, if you're playing the market on the long side, you should at least be apprised of what and be aware of what these leading stocks are doing. So you start to see an Apple bust. You start to see a Netflix bust. You start to see a Vago violate the 10-day line after holding it so well. And you see other names like not Data, but Delta Airlines busting, UAL busting, ALK busting. That was a leading stock, and you have the whole group for the most part starting to look a little bit ugly. Southwest Airlines holding up. This might turn into a short. I mean, look at this is a big V-shaped formation. This looks like garbage to me. Maybe I'll put some shares out here short. What did it look like on the 620? So that's what's naturally going to push you in the right direction. It's actually Love already has a 620 sell signal, so the idea here might be to short it as close to the top of this little range here, so that's 47.38, and then use a buy signal to just get the hell out of the way. That's one approach that you could use with Love. So that's how I operate, and I noticed that conversely, when we get to the bottom, like we were in February, I could see that all of my short sale targets were just getting decimated. The indexes were undercutting their prior lows. And, that's what we saw back here. You get this sort of double undercut here. Everything just extended to the downside. And you're starting to see these ugly ducklings all percolate. So you just start flipping long. And it just naturally pushes me in the right direction. That doesn't mean that in every single day on the way up, I'm necessarily all long. I may be shorting things on the way up and making some money that way. Splunk's starting to come in. I think UA is probably shortable too. Under Armour. You see how you're starting to get the 620 sell signal here, and you got this gap. I don't think it's a viable gap up personally. Very V-shaped and kind of wedgy looking. I don't know. I'd be more inclined to look for a 620 sell signal like you're getting right now, and I'd go ahead and short that turkey. And I'd use the high of the day as a stop. What is that? 48 and change to a buck higher, 2%. It's milk fat. You can handle that. Anyways, that's all we have. We're a little bit over our time, so hopefully there's some concrete stuff for you guys to act on. We went and did a trade today, so you had premium access. You got to actually trade with me. How do you feel about that? Go tell your significant others and spouses, even your children. Tweet about it that you were able to have premium access with Gil and Dr. K as I executed a short sale trade in Splunk at $51.95, and we're making a whopping 30 cents on it right now. Yeah. $750. That pays for some sushi, huh? Well, before or after taxes, let me think. In any case, you guys, that's all we got for now. Hopefully there was something helpful here for you in what is admittedly a difficult and confusing environment. Wouldn't you say, Dr. K?
One of the most,
yeah,
but keeps it interesting.
Yeah, anyways, and look for me on Monday on the Gary K radio show. Hopefully Gary doesn't... We are friends. We've been friends for a while, and a long time, actually. since like 2008. Before that, he was an enemy of O'Neill, but that's another story altogether, which I'll tell someday when we have more time. But look for me on the, what is this show called? I forget, the Edge radio show or something, Investor's Edge. Comes out at 3 p.m. Look at it, look for it on the internet, 3 p.m. Pacific, 6 p.m. Eastern, and that's it. That's all we got. So we'll put out an email on it once I know for sure, just in case Gary does flake on me. So he has done that in the past, but hopefully he won't do it this time. In any case, you guys, thanks for showing up again, and we'll catch you next week. Have a great weekend.
So long, everyone.